We are live. All right. Thank you, Victor. All right. Well, welcome everybody. Thank you for joining us tonight at Quest Trust Company. Many of you are new here. Many of you I've seen a couple of times. So thank you for coming back and thank you for joining us for the first time. My name is Steve Sabaji. I'm the regional sales manager here at Quest. And tonight we are conducting our self-directed IRA social. And we have a new friend of ours here, Lynn Boyer. He's going to talk a little bit about private lending versus using bank channels. Before I bring Lynn up, I just want to give the typical disclaimer that the information that we provide here is for educational purposes only. Whenever you do investing, make sure that you are doing your own due diligence and just be aware Quest cannot provide you any tax, legal, or investment advice. All right, with that being said, I'm going to bring up Lynn. Lynn is a real estate professional who's been in the business. Do you want me to say how long? 76? Is that, that's about like where it began? But he's been around a lot. He's done a lot in the way of different types of real estate investing as well. His focus now is primarily in the area of lending, but he's done everything from residential, commercial, developmental. And what I think is really interesting about Lynn as well is his finance background. In addition to the real estate expertise that he brings, he also is a CPA, so knows a lot of the ins and outs that are related to the tax issues that can go along with it as well. And so with that, I'll let him talk about more of his extraordinary career in different states and different types of real estate and with the private lending. Thanks, everybody. Welcome, Lynn.
All right. I think I'm online here. Thank you, Steve. Thank you for that introduction.
Do you want me to turn the lights down? Can everybody see the streets okay? All right, we'll leave the lights on.
Everybody good right there? One thing Steve left out is I am a runner, but I tell you these past 4 weeks, boy, 5 o'clock in the morning, 80 degrees, it's a no-go. It's rough. It's rough. I'm also married for 25 years. And my wife says after these 25 years, there's two problems. The first one is I don't listen. And the second one is, I don't know. I can't remember. I like that joke. I even got a couple chuckles out there. That's great, 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 great. Please stop me if you have any questions about anything. Just put your hand up. Give me a shout. I don't mind questions. My partner and I, we're the founders. We started the company in 2016. We've done over 900 loans so far. We've also right around $250 million in value so far. Let me get this fancy. Okay, bank loans versus hard money loans. Let's just jump right in here and talk about some of the most common type of loans. I think everybody here is kind of familiar with bank loans. I mean, everybody has a bank loan, especially if you have a house, a 30-year mortgage, lower interest rates, and also, cars, etc. But let's talk about private loans. A lot of people don't know about private loans. Private loans, I consider my friends, family, etc. You may be able to get a better deal from your friends and family. Of course, in my family, it's good not to use family because they'll charge more. My brother charge more. So find a different family. And also, we're going to talk about hard money loans. That's another option that some people might be familiar with hard money loans. Some people may not be familiar with hard money loans. So I'm going to talk more about hard money loans too, and also do comparisons between private money, bank loans, and also hard money loans. I've had 3 Diet Cokes today, so if I go too fast, just say, hey, slow it down. So what is hard money? It's a short-term loan, higher interest rate, and strictly where the property is held as collateral. And I've been asked in the past, why is it called hard money? I actually think it should be called easier money because it's easier to get a loan with a hard money company. It's a whole lot easier than going to a bank and asking for your ratios between your debt, your asset, your wages, all that stuff. And also people use hard money loans for bridge loans. So in other words, if the person's got to sell the property extremely fast, you can use a hard money loan as a bridge until you can get a bank loan. I'll talk a little bit about our programs, and if you're going to use hard money, you should hold this just right. There we go. So this is our different loan programs, and if you're going to use a hard money lender, make sure the property you have in mind, they'll do the loan on, because not every hard money lender will do these different types of loans. Of course, the most common that people use hard money for is fix and flip. And I think you've heard that throughout the times. You know, you buy the wreck on the property, you rehab it, you sell it, and hopefully you make a profit. And you keep going. I mean, that's fix and flip. That's where a lot of people use hard money lenders. And then, of course, the other loan we do is kind of a purchase price only loan. What I'm talking about there is they're going to buy the property for $100,000, $200,000, whatever. They have the money for the purchase of the property. And no, they don't have it for the purchase price. So they use us for the purchase price, but they have the money for the rehab. So they'll do the rehab themselves. I hope I'm loud enough. Am I loud enough here? I've seen everything's good out there. Okay. So again, the purchase price is they're just borrowing the money to buy the property, and then they're going to fix it up themselves. They're going to use the rehab, their own money to do the rehab. The other thing is rentals. And I want to tell you that I was a user. Before I was a lender, I was a user. Now, I'm not talking a drug user. But with rental properties, you almost have to be a user to have rental properties. But I was a hard money user. You like that joke, didn't you, Brad? I was a hard money user to buy rental properties for years. Starting in 2000, I was buying the wreck, using a hard money lender to buy the wreck, fixing it up, presenting it to the bank and say, hey, bank, look, I've got this really nice property. I've got the tenant in there. They would refinance my property. I would pay off the hard money lender and just wash, rinse, and keep on going until I got to about 90 units and lost my hair and my sanity and started selling them. So also, a lot of times people use hard money loans for land developments. And Brad and you and I have talked about that. You know, someone goes out there, buys 20 acres, and they're going to get the property zoned properly, platted, surveys, put in the water, sewer, etc., the roads, and they'll break the property up into different plots and resell it to a developer. But most banks won't loan on raw land because it's just raw land. What are they going to do with it? So they come to hard money lenders to borrow the money for the development and then resell it off later on into different plots. Commercial properties, we get a lot of requests for commercial properties. We get prime examples, restaurants that went out of business and they're going to open up another restaurant. Am I still on here, Steve? No, I think I lost it a minute ago. Oh, it just sounded different. All right, so a lot of people use us for like restaurants. You know, they're buying the restaurant that went out of business. They're redoing it, putting in a new restaurant. They use a hard money loan until they get up operational or until they can get bank financing. A lot of things right now are happening with office buildings. There's a huge project in downtown Dallas, maybe 2 of them, 137 units, I think, in downtown Dallas. Fort Worth has an oil and gas building. I think it's 237 office spaces that are being converted into condos, apartments, etc. You see a lot of that. And they'll come to a hard money lender to say, hey, I have this many investors, this much money, but I need a hard money lender to fill the gap. And we do that quite a bit, quite often. Also for warehouse spaces. They use this for warehouse spaces, industrial properties, and also we'll see a lot of storage units. Everybody wants storage units out there. So you'll see a lot of people using hard money lenders to get a storage unit. In fact, our most recent one, the reason the guy couldn't get bank financing, it was mom and pop owned it for 30 or 40 years. He couldn't prove the assets. What he did prove to us was the rent rolls. He could kind of verify his net income. We loaned on it. We loaned on it for 6 or 7 months. And so he went to the bank and got cheaper money. So my point is, just make sure if you're going to use a hard money lender for a certain property, make sure that they offer that kind of program. And remember, hard money is not for everybody. You know, it just kind of depends on your experience and your risk level, because if this is your first time using hard money, it could be costly if you're not careful. I want to talk a little bit about hard money versus bank financing. Of course, the primary advantage to us is a hard money lender is extremely fast. Some lenders will approve a deal, a person, a project within 24 hours. We're 24 to 48 hours. It just depends. So make sure whatever hard money lender you're using, you ask them what kind of speed can you expect an answer. Interest only payments, it could be an advantage or a disadvantage. I think the advantage is you got lower payments because you're just paying interest and no principal reduction. Sometimes a hard money lender will require an appraisal. It just kind of depends on the lender. We don't always ask for an appraisal. We just kind of evaluate the properties ourselves. We loan in 10, 11 states, mostly Southeast, but we do have one in California. So hopefully we'll see how that one works out. Surveys, you know, if a property's been around for 100 years in an established neighborhood, we don't require a survey, but you still might find some hard money lenders that are wanting a survey. And the biggest thing is not livable. You know, if the borrower comes to us and says, hey, I want to buy this property, it's not livable, but I'm going to fix it up. Here's my plans. That's what we love to see, is a non-livable property. And that's where hard money lenders come into play. And, you know, like I talked about earlier, the disadvantages, it is more expensive, but we're not talking about a 30-year mortgage. We're talking loans for 6 months or less. So if you really sat down and did the calculation on your 6% for a bank or 7% whatever a bank is at now versus a hard money lender at 12%, 6 months, the money is not that much difference. And also, I tell people all the time, it's better to make some money than no money. If you don't have the money to fund the whole deal yourself, but you have to pay a little bit of interest money, like I say, it's better to make a little bit of money instead of no money. And of course, also, it could be a disadvantage if it's a short term. It's a shorter term. If you sign up for a 6-month loan, you run into problems. You might have to either work it out, get an extension, etc. Let's go to bank financing. Of course, we all know it's cheaper to use bank financing, and also the longer term, 30-year mortgages, etc. But the biggest disadvantage is, which I kind of touched on already, is it's a slow process. You know, if a bank's going to want 30, 45, 60 days to close on a property, especially a larger commercial property, but the guy selling the commercial property says, hey, I want my money in 2 weeks, they're not going to be able to use bank financing. So they come to a hard money lender to use our money as a bridge loan until they can get bank financing. And they always will require an appraisal. I don't know of a single bank. Brad, do you know of a single bank that won't require an appraisal? I think they all require appraisal. They also always require a survey. And the biggest disadvantage is the property's got to be livable. If you go to a bank and say, hey, I'm going to buy this wreck on Main Street that I'm going to fix up, they're going to laugh at you and say, no, this property's got to be livable. Unless, of course, if you have an established relationship with a bank, it could be possible, but for the most part, most banks want a property to be livable. And then, of course, the other thing the bank's going to require is also a blood sample on your firstborn. I didn't get many chuckles off of that one. I kind of like that one, but a few chuckles off of it. Guess my jokes are getting worse. All right, let's jump over to hard money versus private money. Boy, there's some great advantages with private money. I mean, if you can work out with your family a custom cost, a custom interest rate, a custom term, it could be great if it's, or you could even say with your family and stuff like that, hey, let's work out a deal where you get half the profit. You put up all the money, I'll do all the work, we'll split the profits. That could be a great alternative to either hard money or bank money. I mean, if they have it and they want to loan it to you, that'd be great. Now, I've heard this story several times. What happens if the project goes south? everybody loses money. Are you going to be able to show up at family birthday parties, Thanksgiving, Christmas? What happens if something goes south? The agreement I had with my brother and I, we went on a lot of deals together. I told him straight up, if we ever get in a disagreement where we're not going to talk to each other, we're selling. And so that was our agreement up front. So if you have an agreement up front, I tell people, hey, it could work out, but hopefully the deal works out, everybody makes money, the family's happy, and next thing you know, you keep on doing more and more deals. I want to go over a quick example of how people make money using hard money. But before that, I was driving this neighborhood the other day, and I saw this burglar. He was kicking in the front door, his own front door. And I realized, I said, he must be working from home. I like that one a little bit. Oh, come on. It's not that late yet. So a quick example right here. So this person, this is a made up numbers. He bought the house for $100,000. The value was $200,000, cost of rehab $50,000. The hard money loan is 70% of the value, the after repaired value. And someone would loan $140,000 on this, and then they would charge interest. I kind of guesstimated some numbers, $5,600 on the interest. Points are like our loan origination fee. I put down $2,800. Insurance, I put $1,000, and then other fees, I just threw in $500. So that worked out to the cost is about $150,000. So we'll just say everything went really well. They sold the property, $200,000. They made $40,000 plus or minus. And the reason I said $40,000, I said my cost were $150,000. But if you look at those numbers closely, $100,000 of the purchase, $50,000 for the rehab. So the person already had to fund $10,000 of the rehab amount. Go ahead. Yes, I did. I just kind of made up some numbers just in case people had questions. I just kind of guesstimated and threw some numbers out there, and but yeah, that was on purpose because I'm throwing out $150,000 on my cost, which it's really about $200 shorter than that. And I'm a CPA, but I can't think that fast. And that's a really good question. Somebody asked, what about the realtor fees? And so it said $40,000. I was thinking $40,000 profit less your closing cost, which not only do you have realtor fees, you have title insurance, title companies, some of their bogus fees, and some of the the fees that the title companies put in there. Hope I don't have any title company people here. So to be profitable, keep your interest costs as low as possible. Get in there. If someone came to us and said, hey, I'm going to do a fix and flip and it's going to take me a year to do it, I'd probably say, no, don't do it. Don't use us. We want you to be successful. How do we make money? Repeat clients. If you're going to work, you're going to say you're going to take a year on that rehab, you're probably going to lose money. Don't do it. Go to a bank or friends and family, because we don't want you to lose money. I want everybody to be successful. Also, borrow the least amount of money as possible. If someone coming here, I want to max it out, get as much money as possible. That's not a good plan either. Borrow the least amount of money as possible. Put as much money into the property as you can. And furthermore, get bids from your contractors. Make the contractors stick with what they bid. Be involved in the project. Maybe partner with somebody else. I mean, I've referred people that, I've never flipped a house, but I want to do it. Well, who do you have helping you? Who's your mentor? Maybe you can partner with somebody. If it's a good deal, you can surely find a partner and make some money so that you'll have save your money and, keep on continuing with this process. All right, here's some great questions. By limiting your risk, by asking these questions from anybody, any hard money lender. If they come to you and said, hey, I don't know the interest rate, but we'll work on it. When we get going to close, don't do it. You got to know that set interest rate so you can evaluate this property to make sure you're going to make some money. Second thing is unclear loan offer sheet. I've looked at some of our competitors' loan offer sheets. It took me 5 to 10 minutes to find out the subtractions, the additions, the cost, the expenses, and the loan amount. Make sure if you have a hard time understanding that loan offer sheet, I would look for another hard money lender too, because it's just not good to not be able to understand it. And some people are too afraid to ask questions. I would probably just look for another hard money lender right away. Fees or application fees. I know of a lender out there that charges $995 for an application. And an application is usually an online, simple application. Maybe some banks charge a little bit of application fee, but I know if I was going to be charged $995 for an application fee, I'd run. Hidden fees. Make sure you have a clear understanding of all the fees and make sure they're all listed out and say, hey, when I'm going to close this property, these are the fees. This is the money I expect to be paying when I close the property. I've kind of already mentioned about a 6-month loan, but do they offer an extension? What happens if you do run into into problems? You're not able to pay them off in 6 months. Is there an extension available? Do they charge for it? Make sure that's all laid out in your loan documents to make sure you can do an extension if you run into trouble. Person came to us, they're in a problem with the historical society and they needed an extension. We gave them an extension, but if the property's in a historical society, you might need extra time to get the deal done. Scope of work, boy, the nightmare scope of work is, what are you going to do? Kitchen 10,000, roof 10,000, all your repairs detailed out. Almost every hard money lender is going to want to know exactly what you're doing on the scope of work. But here's the question you should ask on the scope of work. A lender said that you said on your scope of work, it's going to put a new roof on there for $10,000. The guy put a new roof on there, but it only cost $8,000. Right, he got a great deal. But the question to ask is, what happens to that other $2,000? This lender says, since you had $10,000 on your scope of work, but you only used $8,000, $2,000 is gone. You can't use that any other place. Some lenders will say, you can use this $2,000 on some other project, but some of them will say, it's gone. You said roof for $10,000, that's it. So just ask those kind of questions. Also, make sure you're working with a direct lender. There's a lot of loan brokers out there. Loan brokers make money by partnering people up, borrowers, lenders. Make sure you're dealing with a direct lender. The problem gets to be, if you're dealing with a loan broker, there's so many different levels of people you're dealing with, and also everybody wants a fee on top of that. Before you know it, you're paying so much for the loan, your whole deal won't be profitable. An appraisal, we kind of talked about that. Ask whether you're going to need an appraisal. Someone will definitely ask for an appraisal, and that's not a big deal. Minimum and maximum loan amounts. I'm only going to do a $100,000 loan. Is your lender going to do that? Some lenders will, some won't. I'm going to do a commercial deal for $10 million. You need to know what their minimum and maximum loan amount is. The loan terms, I've already kind of touched on that. You got to know the terms. You have to identify all those terms. What's the loan amount? What's the interest rate? How long, etc. When's the payment due? How are you going to get the payment? Are you going to have me write a check? Are you going to draft my account, ACH? You should know all those terms, and then make sure at the closing table, those terms match what you were promised. When you start looking for hard money lenders, start looking at their reviews. And there's quite a few reviews out there where my lender changed the terms at the last minute. I'm sitting at the closing table, and instead of getting 12%, I'm getting 13% or 14%. Or my down payment was $20,000, but now it's $40,000. I don't know what to do. You look out there and you see those reviews. Make sure you run from those kind of lenders. Contractors, boy, who's going to pay the contractor? Are you paying the contractor? Someone else paying the contractor? Is it a contractor you know? Like Ayuda up here, if you know him, you trust him, use him. He might be more, I don't know, but if he is, that's all right. You got a contractor that you're shopping around and trying to get the lowest price. It may not be the best option. going to talk about Wedgwood. I don't know if you know Wedgwood in Fort Worth. It's right off of 20 and Trail Lake. Lady came to us, Bev. She came to us. Great property. 250,000 ARV. Wanted to borrow 125 from us. Rehab 60 or 70,000. She had 80,000 cash in the bank. Great borrower. Super credit scores. Cash. Not so much experience. In fact, this was her first flip. Contractor shows up, gives her a bid for 60,000. She came into our office crying. Why? She gave the contractor $40,000, never to see him again. Never to see him again. That's why after that, we put a video out on our website that talks about if you got a contractor that can't afford to at least front a little work on the project, then you might want to look for another contractor. Now, I've heard several stories where the person says the contractor wanted me to go down and buy supplies at Home Depot for $10,000. That's a whole different story. You get your supplies, get them to your house, he starts working, you start paying him off of draws. That's a different story. But make sure you know the contractor. Back to that story, after she finished the project, I don't know how, but she came to us and asked for a little bit more money, and we gave her more money, and she finished the project. You remember one of those days where we get 5 inches of rain in about 30 seconds? And I said she finished the project. It was listed with a realtor. It was 2 days listing. It was immaculate. She did a great job. We got the big rainstorm. It hadn't rained for 2 months like now, or 3 months. The roof had never been repaired. It dropped all the ceiling insulation, sheetrock, dropped the whole thing. So she came back to us. We loaned her more money again to fix the roof because she never did. We actually paid her to finish the sheetrock. We still wanted her to complete this project, be successful. Long story short, she did complete the project. She made $1,000 off the deal and lost her $80,000 because of the contractor, not knowing the contractor and shopping around and the first time deal with her. Wholesalers, boy, is there any wholesalers out here? Wholesalers, just be careful with wholesalers. All I can say is a lot of them are pretty young. A lot of them have never rehabbed a house. A lot of them are looking at the rehab expenses from 2 years ago, and they haven't been to Home Depot in 2 years. So when they're saying the rehab is 20 or 30,000 on this thing from 1950, you might want to go out and get a second bid and say, I need a second opinion on the rehab. And also the same goes for the value of the house. What do they say on the value? Get a hold of your local realtor. I know we got some realtors in here. Tim's right back there. We got some local realtors. Get a second opinion from them and make sure if the wholesaler is saying it's worth 200, get another opinion to make sure. Permits. Wow. Flower mound. Guy came, great deal, you know, going along. It sounds good. He was going to do a little paint, little carpet. He didn't need permits for that. Well, he starts working on the property, and we didn't know this, but he ripped out walls and decided to do all this other stuff way above his intended, what he told us in the beginning, carpet, paint. Well, no permits. Piled a big pile of trash out in the backyard. Neighbors said, hey, there's a big pile of trash here. Code compliance comes by. Says, hey, there's a big pile of trash here. Code compliance guy says, there's no permits on this house. Made the city mad. The guy goes down to the city complaining. He's mad. Makes the city extremely mad. Long story short, in Flower Mound, if you do more than 50% rehab to the property of its value, you have to have a permit. And not only do you have to have a permit, you have to bring it up to code. You have to bring it up to code to current standards. So luckily for us as the lender, this house overlooked the lake. It was a nice property. But for the borrower, they had to take 10 feet off the front of the house to make it standard because it was set too close to the road when it was built in the 50s and 60s. Had to go 10 foot back. And plus the driveway, when it was poured in 1950, was 4 or 5 feet over the boundary line. So the city of Flower Mound required two things: 10 foot off the front of the house, move the driveway. Long story short, we got the house back, and the contractor or the developer, he just bought the lot, and he loved the lot, and the lot was worth it. So we didn't come out too bad. We cried a little bit. We foreclosed on that one, and we definitely cried and had a little wine, and everything was better. Insurance. Most people, when they come to us and say, hey, I've already got the insurance on this property, I'm going to fix it and flip it, etc., they don't have the right insurance, because when they contacted their agent, they said, hey, I'm buying this house. I'm going to fix it and flip it. And the agent may say, hey, okay, that sounds great. You're going to move into it. Yeah. If they don't have the right insurance, so you know, if they don't have builder's risk insurance and something happens to that property, they're out, and the lender's out too. You have to make sure they have the right insurance. Or some hard money lenders will have their insurance already set up, like a blanket policy, and then the property is just added to their blanket policy. And do you have anything like that, Ayuda, or not? You know, we have that. We when we first started off, we started looking at so many insurance policies. It was blurry to me because every insurance agent had something different. So we just set up a blanket policy, and every property is just added to our policy. So then we don't have to worry about, is it meeting the requirements? But you should contact your hard money lender and make sure, if you're going to do this, what kind of requirements are they going to require for the insurance purposes. Title companies. I don't know if anybody remembers the lady probably 5 or 6 years ago now. And in fact, it was one of my properties. I purchased it, $150,000, had a $75,000 lien on there. And that lien, when I bought it, was supposed to be paid off. She gathered money from several different transactions, and I think she was out of South Lake. She ended up running to Chicago, and they caught her in Chicago, and she stole several millions of dollars. One of mine was mine, because when I went to go sell the property after I rehabbed it, they said, oh, you got the $75,000 lien on here, Lynn. Wait a minute. When I bought it, that lien was supposed to be paid off. Luckily, I had title insurance, and that's where I'm going with this. Title insurance, using title companies to make sure everything's legit on title companies, title policies, and it had insurance on that property, and they took care of it. But that was a real story that I don't know whatever happened to her, but I know she ran off with several $1 million, and $75,000 of it was my money. And, you know, I talked a little bit about the loan terms. Wait a minute, I think I'm skipped a page. Oh yeah, we talked about the wholesale permits, insurance. Yeah, get a title policy, definitely a title policy. I want to talk a little bit about terms, and we've covered some of these. We talked about the application. Do they charge for that? Is it free, which it should be free? Appraisals, do they require an appraisal? Some lenders are going to ask for a BPO, a broker's price opinion. So that could be done by your buddy. It could be really cheap. They give you that BPO, and you could use that for your hard money lender, possibly, if it's acceptable. Surveys, we talked about the surveys. Oh, inspections, I want to kind of talk about that, inspections. Some lenders are going to say, we need this property inspected before you even buy it. Are we even going to think about doing the deal? We need to inspect it beforehand. And that's also that needs to be discussed when you're doing your draws. Are you going to send out a inspector every time I do a draw, and I complete the kitchen for $10,000? Are you going to send an inspector out before you release the money back to me? Wires, ACH, do you charge a fee for that? There are lenders out there that, even though they're not being charged by the bank, they will charge for a wire or an ACH. And even if they're drawing the money, ACH and the money out of your checking account, there still could be a fee associated with it. So make sure you understand all the fees on there. There we go. Doc prep fee, and that's pretty common. Banks will charge on your doc prep fee, and that's a pretty standard fee. Make sure it's just not excessive. Processing fee, I don't see this too often, but I have seen some lenders charge a processing fee. The biggest thing is this administration fee. When you send in a payment to your lender, are they sending that payment to a third party processing, and are they charging you a management fee every month you're making a payment? I've seen that. That's pretty common. Some places will charge this processing fee. Or also they call it like a management fee. Broker fees, that could be associated with what I talked earlier about loan brokers. And try to stay away from loan brokers because they'll charge a fee, and then, next thing you know, you're paying 5 or 6 points for a loan, and that you're not going to make any money off of that. And there's a payment fee where I kind of talked about that is as you're making the payment, they charge a fee for every time you make the payment. I also call it a convenience fee. I've seen that several times as the ACH payment. They call it a convenience fee to add it to your ACH. Payoff, is there a charge just to even get your payoff? I mean, you're going to need to know that information at the end of 6 months. You're going to want to know how much do I owe the hard money lender. Do they charge for that? Credit reports. Do they charge for the credit reports? Can you furnish your free credit reports from Discovery or some other credit card companies? Can you furnish that free one instead of having to pay the credit report? I also was up here talking about flood zone properties. Be really careful, and this is a good conversation to have with your realtor. If I'm in Fort Worth and I'm buying a property in a flood zone, it could seriously affect the value than, versus Houston. I mean, everything in Houston is in the flood zone. It's no big deal. Everything flood zone. But in Fort Worth, Dallas, any place here in the Metroplex, if you're buying in the flood zone, just make sure your value is true, because it definitely could affect your price point on the property. Another question to really ask is the loan to cost or loan to value. What percentage are they using? Are they using both? Are they using just the loan to value? In the example, $200,000 value, loan amount 140, 70% loan to value. That was the example. But some lenders are going to use loan to cost. Some are going to use loan to value. You need to make sure which one are they using, or they could be using both. There's that good looking picture. That was an old picture. I think I had more hair then. So we talked about different types of properties, different types of loans. I hope I compared a little bit about private money, bank loans, hard money loans. What's your goal? What do you want to do? Kind of lay it out, kind of talk to somebody else, see what your experience is and what's your project? What do you want to do? So what kind of questions do we have? Told you I had a lot of Diet Coke, so I went kind of fast, but that's okay. And I'm getting thirsty.
One property that we ran into plating issues in Fort Worth. The EPKs, stuff like that, aren't fully rectified, so be careful.
Right.
One of the problems we ran into here more recently was platting a property. We purchased it. It wasn't platted. Before you could do any building, the city said you've got to get it replatted. We're back to bringing it up to standards, all that other stuff. Just be careful.
And how long did it take you, Clyde, on that replatting process?
We ended up getting a variance.
Nice.
Luckily,
Yeah.
but we are going to have it platted.
Yeah. And so has it been a month process, 2 months process? That's something to consider if you went into a 6-month loan and then you've got a problem with the city, replatting, zoning problems. It could be a long process. The next thing you know, your profit is shrinking because of time eating away the value. So, any other questions?
Any other questions here in the room?
Do we have stuff online?
We're looking to see. We may.
Are they all asleep?
I don't think so. If they are, they're asleep in front of their computers. Do we know if we have any online questions? I think we're good. Oh,
Sure.
one more.
Clyde?
Yeah, I was just thinking about it. 3 years ago, pre-COVID, the rates for hard money was what?
I would probably say right around 11, 12 for hard money right before COVID. And then, we're like several other hard money companies. We have investors. Our investors are watching the news and they're saying, hey, every other person's getting a higher interest rate. Why can't I get a higher interest rate?
That was my question.
Our investors are getting a higher interest rate, which in turn we're charging a higher interest rate, which is real common. So 12% residential property, good experience, good money, good credit scores, maybe another job. 13, 14 commercial property. It just kind of depends on the same things. Experience, what kind of deal is it? What kind of property is, something that you're reminding me about this is we're talking about interest rates too. Another good question is, if you're doing a large commercial project, we'll say 5 million or something, but you're starting off at $1 million and then you're loaning or you're borrowing up to 5 million, what interest rate are you going to be, what dollar amount are you going to be charged at? Are you going to start off at $1 million and you're going to pay interest on $1 million? Then when you draw out another $1 million, 2 million, or is it, okay, you borrowed 5 million. Are you going to be charged on 5 million right at once? And that's common with, questions you should know from a hard money lender. Good questions. Well, I think Steve's going to talk a little bit about using your Quest money, your IRA, your self-directed IRA to do deals. I think that's what he's talking about.
I thought we had a question that was online, but I haven't seen it come across yet. Yeah.
Did they ask if we had Shiner Light? Is that what they asked?
That and what kind of food did we have tonight?
Oh, yeah, it was good food. It was good food. We appreciate it.
Not a problem. So I'll give it a minute. Quest outdid itself tonight.
Okay.
So, all right. Well, thanks, Lynn.
Thank you.
Appreciate it.
Appreciate it. Thanks.
So I'm just, Lynn, get back here.
Oh.
Do you have it? Can you?
So Lynn, the question is,
The question online is, do we do new construction?
yes, do you do new construction hard money and what are the rates?
Yes, we do. We do new construction. And for new construction, the rates are for a house. So I believe we're talking about a house. So it'd be 12 to 13%, depending on experience, cash in the deal, how much money they're talking about. And the answer is yes, we do new construction. And we do it in about 10 states. I don't know where this online person is, but we do it in 10 states.
Fantastic. See, I think that's everything.
All right.
Oh, actually, I have another one.
Okay.
What do you think of accepting promissory notes and deed of trust for a hard loan? Pays 15% for 45 days.
Well, like I said earlier, if they have to pay 15% to do the deal, I would say it's better to make some money than no money.
Okay.
I think I answered that question. I think that's what they were asking was 15% for 45 days. Yeah.
Perfect. Okay. I believe that's the last of
All
our
right.
questions. Thank you so much.
So let me just follow up on that first question, though, about the new home loan and the interest rate. How does that compare, say, to private lending or a bank?
Well, first off, I think you'd have really a lot of trouble getting a bank loan for new construction. It is possible, but you may see that the bank may say, hey, we want you to own the property, and then we'll start loaning on the construction loan. They'll call it a construction loan. And as you build the house, they'll give you draw money. It's a hard process, but it's not impossible. If you have a relationship with a bank that, you've done business with in the past, you can get a construction loan, but it's just not the easiest thing to do. But if you got private money, friends, family, hey, that's a great idea. Get private money and then, have grandma and pay grandma back. Hopefully you pay her back and then go to get a bank loan. So
We just tried to get a new construction loan. So I had to use a broker, which was a friend of mine. My builder has done 40 houses,
Yep.
et cetera, et cetera. But it took me 8 months. It was a long, arduous process. I'm in the deal for half of what the value of the house is
Yeah.
as the other part of the money. And so, I mean, it can be done.
Just a long, slow process.
It's a longer process than I
Painful.
anticipated,
Painful.
but it works.
Yeah.
So,
I,
it
I,
works.
I,
Yes.
I
In a
think,
manner of speaking, it works.
I think it was you, Brad, that said a lot of people, commercial brokers, commercial lenders, or commercial builders, or, you know, they're in this big commercial project. They don't mind paying the extra money because it's less hassle. They can get the loan done. They can get it done fast. It's a lot less hassle going to a bank and begging and pleading for 8 months, 10 months, et cetera. It's easier to say, I've got this property, I've got this deal, I've got this project. I want to close on it in 2 weeks. Can you do it? And that's how come a lot of people use hard money lenders. Right, right. Someone said the only real option, or Brad said the only real option, and it's true.
Did you?
This may be a dumb question, but
No, there's no dumb question.
2 years ago, wasn't prime half of what it is now?
Exactly. It was.
Why, your rates haven't gone up that much?
They have not gone up.
I mean,
They have not gone up. They haven't doubled, let's put it that way. We're still competitive because luckily some of our investors have not fully asked for that increase.
well,
And so since they haven't done it, we haven't jumped up there, but
Well, at the
we're
same-
very competitive.
and at the same time, CD rates a couple of years ago were maybe sub 1%, and now they're 5%.
5%
Why
on
aren't those
CD
guys
rate.
pushing you harder, which would require you to,
I think a lot of our investors have started with us. In fact, you know, a little bit more about my background when I was using hard money. A lot of those people, I was using them when I bought the rental properties, more private money too, and hard money. And since that relationship has been there for 20 years, I don't think they're after blood.
and
think-
it's passive for them and they trust you and that means a
Right,
lot. So,
right.
okay.
It's been flowing, the money's flowed to our investors for, you know, since 2016, or really as the hard money company since 2016. But previously, my investors and my partners' investors, maybe 20 years.
And is it the simplicity of the process now makes it even that much more competitive?
Correct.
It's still profitable, but it's now an easier,
Yep.
an easier solution, or you know, like a little more of a no-brainer almost, I guess.
Exactly. And no investors of ours have ever lost any money. Now, I will say before, I should have said that before that. Have we done some deals where we've lost money? Absolutely. But have our investors lost any money? The answer is no, absolutely not. So, and that's another reason why maybe they're not out for that 50, 100% increase over where prime was and where it is today. So,
All right.
appreciate it.
All right. Thank you.
Thank you.
All right. All right. Just briefly, I'm going to run through a couple of the announcements if the slides will
Thank you.
move forward or backwards now, as the case may be. Just a real quick update on some things going on here at Quest. Right now, we are in the midst of a promotion that's very popular. If you're interested in a new account or know somebody who may be interested in a new account, it is our double rewards where you can build on the referral program. It would allow a $50 discount on the account opening fee, normally $100. And that's also a $50 credit back to anyone who refers an individual for a new account. So the referral program always has a twofold benefit that way. And now it's better than before. And then just lastly, a little plug for the Gold Family program that we have here at Quest. This is starting to make a lot more sense for some folks. This is where you have the ability to bundle multiple accounts under one fee plan. And the fee plan actually also incorporates a number of the traditional or typical service fees. So if you're interested in getting some more information about this, just ask one of us here and we'll walk you through it. All right. And then finally, it's back. Quest Expo. Show of hands, we're a couple of you were here for the Elite Multifamily Summit this weekend. Saw a couple of you there. Yes. Next year will be the expo, which will be here in the Dallas area. For those of you who aren't familiar with the expo, it's going to be a 2-day event. It will be quite the full event about everything related to multifamily investing. It is going to incorporate not just multifamily, it would be real estate, lending, anything you can do relative to self-directing IRAs. This is going to be the event to be at. Plus, there'll be a nationwide group of vendors and very extensive networking opportunities as well. For those of you who maybe were not familiar with it from last year, that was when we brought it back the first time. We had about 800 people that attended over the course of the weekend, and it was really quite something. And I think this time it will be even better, primarily because it's in Dallas, right? All right. Okay, with that, we're gonna, hey, Bowie, you got a question?
But what I want to know, because you mentioned that this one is going to be focused on commercial. That one was focused on all kinds of real estate investment, including all the way from simple fix and flips up to land development to, okay, I just wanted to confirm that. Okay, and by the way, I went to all of them until COVID hit, and they are absolutely worth the time and money. They are exceptional. So
Appreciate that. Thank you. Yeah, and just in case I wasn't clear, yeah, it is going to be everything. Anything self-directed IRA related. I've kind of heard a little bit about some of the things that they're planning. So the idea is that it does incorporate real estate and in its many forms, as you would typically expect. But let's not forget there are other things you can do with self-directed IRAs, not the least of which are things like crypto and private company stock and oil and gas and things like that. All those topics will be covered. All right. So now it's that time of the evening we all love. It's time for deal pitching. This is where we will invite you to come up, and you will have 90 seconds on the clock. Not 90. And the mantra, as you all will remember, is, everyone remember? Be brief, be bright, be gone. First, we have our good friend DeLorean. He never takes 90 seconds, but gives you a wealth of information nonetheless.
Thank you, Steve. My name is DeLorean, like the car from Back to the Future. I do apartment investing. We find the deal, we do due diligence on the apartment complex, we close on it, we manage it, and in 3 to 5 years, we look to double investor money. You can reach me at 214-277-3902 or email me at multifamilyabc@gmail.com. And I also do apartment investing education. All right, thank you so much.
All right. Thank you. Who's next? This is whether or not you have a service, whether you have an investment opportunity, or even if you are looking for an opportunity. We invite everybody to come up to offer whatever it is they have. Please.
I offer some residual income on all this stuff you have to pay for, all your electricity, all the other stuff that comes with providing services. So we get a residual income on your electricity and your phone and all those kind of things that you just have to pay for. And so it's just a way of helping each other out.
Okay. Do you want to provide your information?
Oh, you can just come up and visit me.
Okay.
I'd rather talk to you personally.
Oh, okay. Well, those who are not here in person.
Oh, that's all right. Here. My name's Lorraine, and my number's 817-454-9915.
There we go. I thought maybe Lorraine was going to make those people pay for not being here in person. I do too. I totally agree. Plus, they all missed the mini beef Wellingtons. Sorry, I had to throw that in there. All right. Anyone else? Anyone want to talk about a service they have or an investment opportunity they're looking for? Excellent. Here we go. One of our new people here today. Nice. It was great meeting you. What do you got?
My name is Louis McClam. I actually have an investment opportunity. We're developing the Netflix of podcasting. What we do is we provide podcasters with a global reach and provide localization services, give them reach so they can actually have their language in multiple countries, up to like 10 different countries, and provide monetization and advertising so they can make money. So we all make money. So you can actually reach out to me if you have any questions at all. My number is 619-940-9700. And you can actually go to our website at thefizzer.com.
Awesome. Thank you. So, Louis, let me ask you, how do you envision the structure of the deal? Is it being set up as like what kind of business entity? LLC, JV? C Corp? Okay. Okay. So for those of you at home, what Louis was saying is that there are multiple capital stakes you can take in it. The primary form is a C Corp if you are going in from an equity standpoint, which is certainly something that's permissible through self-directed IRAs, but also the idea of a convertible. So you could start with debt that could convert to equity. Again, something we see a great deal of. And we see a lot of it in this office, especially because this is where we have notes and we have private entities specifically. So good. Thank you. Thank you. Anyone else? Here we go. All right, Joe. I don't put myself on the clock. I only put you guys. So there we go.
That's very fair. My name's Joe. I moved to Dallas actually about a month and a half ago from College Station. Up there, I was renovating a 176-unit multifamily property. Left that contracting up there. That deal didn't need me anymore. I wanted to come down to Dallas, so I'm regrowing my contracting down here. Anything from handyman to renovations, let me know. Phone number is 972-503-6653. I also have cards for anyone that's here.
You can go put the card in front of the camera if you want to. We got no problem with that. Right there in the back. You see the camera right there? Yeah. Yeah. No, just put it right there in front of the camera and everyone can see it. And don't forget, it's archived too. So people will be able to go back and find it. All right. Bowie. All right. I knew it would just be a minute or two before you'd come up and share something.
I love competition. I've been in highly competitive fields for my entire career, and what kind of Lynn presented, that's my playbook too. And I think most of you know that I do standard real estate investing loans. As far as the minimum and maximum, I've lended a small cosmetic loan for $26,000. We're currently underwriting a couple of $3 million plus land development projects. One's commercial, one's residential. So the loan size, I've been told 30 million is the top, but it really isn't. I think many of you know I joined that mastermind group with these extremely wealthy investors in Florida, and I've got a point man, so I can get very, very, very good rates. I just suggest that you shop for loans too. See if Lynn get a better rate for you, go with him. If I can, then go with the least expensive. But another real exciting development, I've been so successful with brokering their money. I now am allowed to broker financing loans, business financing loans, as these would be small business association loans. That's government-backed loans, term loans, revolving line of credits, which is a working capital loan, small business loans, equipment financing. So I've got these to hand out for any of you who want to. I forgot about the online, so I'm just going to give my mobile number. But to the people online, Bowie Ballard, area code 972-342-6341. And please identify yourself. I get so many phone calls every day, just say from the Quest Trust, and so I'll know who I'm talking to. So sorry I went over.
You're good. You're good. All right. Up, I see Tim, and then we got you. I was hoping you're coming up. All right.
Pull me off the stage after 90 seconds.
Bowie's the only one who gets a little over 90.
I'll take his extra stuff. I've been coming to Quest for years. Love this company, good people. So my name is Tim Lantry. I'm a realtor. I do both commercial and residential. I'm local here in the Dallas-Fort Worth area, but we can go anywhere in Texas. So best way to get a hold of me is my website. It's just my name, Timothy, TIMOTHY LANTRY @exprealty.com. No relation to Coach Landry with Cowboys, so. Anyway, thank you, and have a good evening.
Thanks. So I got a lot of dirty looks for that comment. All right.
All right, guys, my name is Yuda Izmagristo. I'm an insurance broker, so, specialized in property insurance, apartment buildings. I can do also commercial insurance, whatever you need. My phone number is 972-750-8671. And for those of you who are here, you can also approach me, and I have business cards.
Awesome. Thank you. I'm so glad you came up, because this is one of the things I really appreciate about the events that we try to do, is that, it's not just the real estate. It's not just the, meeting of, people that have a deal or that are looking to lend or borrow. It's about building the network. And so thank you. We appreciate you being here. All right. Another newbie. Come on up and tell us who you are.
I'll be brief. My name's Ray Chappell. I'm a financial professional. So any families or individuals that are wanting to restructure their finance so that you may be able to make some of these investments and get into some of these business ventures, feel free to come and see me. We work with any and everybody. So for anybody online, the number is 214-542-2581. Thank you.
Awesome. Thank you. Thanks for coming, Ray. And again, it's all part of the big picture, right? Oh, Bowie, you got more? Some people did leave their time on the table, so.
Sorry, I did this. I forgot to tell you that we invest, and I said it's we. I'm experienced and I really know what I'm doing, but my partners, I'm like a newcomer to them. They're so highly experienced in creative financing, but we invest in all 50 states. South Dakota and Alaska are particularly challenging because of the regulations, but we figured out ways to do that so nationwide and creative financing. We can, work with down payments and everything with equity, partial equity or something in the program in lieu of, things. I think you understand what I'm talking about. We're very flexible. So,
all right. Not a problem. Not a problem. All right. So let's end it there. Clyde, you got one? All right.
Okay.
And you know why.
Gotcha. My name is Clyde Rainford. My wife and I do real estate investing in manufactured home parks. We have one park that we're trying to finish up in order to, it's 43 pads, 30 are filled. We need a wastewater treatment plant to finish the park. That way we can fill it to capacity. Borrowed 1.2 mil, asking for about 400K. We have all the permits, TCEQ and City of Fort Worth. That's a job, but we're done. The bank is very, very slow, and we're in the middle of trying to get this thing going. So we're looking for somebody to help us out. Telephone number. going to give you my wife's phone number, Kim Schultz Rainford, 214-215-6886. She's the brains. I'm just the muscle. The telephone number is 214-215-6886. Kim Schultz Rainford.
Excellent. All right. I think I've seen some people perk up around the room already. Kim's phone is getting passed around, or phones are passed to her, and people are like looking at you guys like you're mini beef Wellingtons right now, I think, actually. Yeah. Something to that effect. All right. So we're going to conclude there. We will be here for another 50 minutes or so. So we're not kicking you out too soon. If you choose to go, that's fine. So I guess that's it for me too. All right. Thank you guys. And again, thank you at home. We appreciate it and see you again soon.